Welcome everyone to this Tuesday edition of Inside India. I'm Sri Jegarajah. Here are your headlines. JP Morgan upgrades emerging markets to overweight, citing fewer trade headwinds and a softer US dollar. And that could provide a further boost to the Indian markets today, which are set to open higher. Hon Hai will be injecting $1.5 billion into its India unit as the iPhone maker moves more production to India from China. Right, let's start by taking a look at the Asian markets, which are doing a fairly admirable job in terms of recovering after being hit by the credit rating downgrade on the US sovereign by Moody's a few days ago. And there is a positive catalyst here, and we are seeing a return of confidence after China's PBOC cut the benchmark lending rate for the first time since October. So that's spilling through into the market, with the exception of the Malaysian benchmark, which is down by just a fractional 0.5%. Nikkei 225 is up by about 0.5%. And elsewhere, we are seeing gains of just in the order of about 1% if you look at the Hang Seng index at 23,561. EM equities, including India, getting an upgrade from JP Morgan, easing US-China tariff tensions, reducing a significant headwind for EM equities. According to JPM, they're upgrading the rating on EM stocks to overweight from neutral. Quick check on the US dollar while we're at it. Dollar index still holding the century mark at 148. JP Morgan also expects the dollar to remain softer in the second half of this year, benefiting equities in emerging markets. Now, Indian markets join the trading day in about 45 minutes' time. Let's give you a glimpse of what to expect and take a look at GIFT Nifty futures, and they are implying an opening number in the region of slightly above the 25,000 level for the benchmark Nifty 50. That would suggest just a very modest incline, considering where we left off yesterday, below that 25k threshold. Dollar rupee exchange rate at 85.4180. On the trade front, Bloomberg is reporting that India is seeking a trade deal with the United States in 3 tranches. An interim agreement is expected to be reached by July, with details to be worked on later. That's also around the time when President Trump's 90-day pause ends and reciprocal tariffs kick in. In the meantime, as per other reports, India is also negotiating for the United States to lift non-tariff barriers. A delegation from New Delhi is currently in Washington for trade talks that end today. And Apple supplier Hon Hai is committing $1.5 billion investment into India. An exchange filing showed Hon Hai has committed the amount to its Indian unit. The investment is expected to power Hon Hai's production capacity expansion in southern India. Remember, Hon Hai or Foxconn is the primary manufacturer of Apple's iPhones, and this comes days after President Trump expressed his unhappiness over Apple building and investing in India. And another India expansion, this time from the Middle East. Indian Central Bank giving in-principle approval to Emirates NBD Bank. The RBI's approval for the Dubai-based bank is to set up a wholly owned unit in India. Reports say Emirates NBD was one of the banks approved by the RBI to bid for a majority stake in government-owned IDBI Bank. This comes as India is mulling stricter rules on foreign ownership. Reuters is reporting that the new rules could streamline how India looks at foreign-owned companies and funds. Both direct and indirect ownership could be subjected to foreign direct investment regulations, while restructuring on transferring shares. Right, let's bring in Atul Singh now. I'm delighted that Atul is joining me here at the SGX on Inside India. He's CEO of LGT Wealth India. Atul, welcome to the programme. Let's start by talking to you about the prospects for developing and growing the private banking business in India. What is the size of the addressable market opportunity in India for LGT Wealth?
Thank you, Sri. Thank you for having me here. See, the opportunity size is large. India is 4th largest economy in the world. going to be third largest economy soon. And in India, the GDP growth has directly resulted in growth in wealth. So, any estimates you look at on wealthy individuals, families, HNIs, ultra HNIs, the growth rates are one of the highest in the world. So from growth perspective, it offers one of the best prospects from private banking industry. But more importantly, the phenomena of financialization that's going on in India actually overlays on those growth numbers. So Indian families largely invested in real assets, real estate, gold in the past, and slowly they are migrating to financial assets. And as that happens, the financial advisory becomes a lot more relevant. So that increasing sophistication in the marketplace also creates significant opportunities for private banking players.
And we will talk about the opportunities and the products and how you service that expanding client base, Atul, later on in our interview. But paint some figures on it. LGT Wealth entered the Indian market in 2022, saw a 65% surge in AUM to $2.4 billion in calendar year 2023. What's been the growth trajectory since then?
So our assets have been, even since then, growing at about 35 to 40%, and we feel quite comfortable about that growth rate to maintain. Like I said, combination of these two factors, the growth in wealthy individuals, the way liquidity events are happening for businesses and entrepreneurs. Every day there are 6 or 7 companies that get significantly funded or has a liquidity event, which creates, let's say $10 millionaires per company, right? And all of that new HNIs and ultra HNIs coming into the market create significant assets to go after. So I believe that India is not really a demand constraint market, it's a supply constraint market. There is actually not that much value in ascertaining demand projections because demand is there. It's about supply. Can you really build a platform that can service these families effectively, and can you build a profitable business servicing them well, right? So that's the challenge, that's what we are focused on. And we feel that our global footprint helps us now serving these new age Indian families and Indian wealth quite well, where we are able to connect not only our India platform to the clients, but also our capabilities in Asia, in UK, in Europe to Indian families' emerging needs as they are globalizing. And that sort of combination creates a compelling proposition for them, which we are seeing play off quite well. So yeah, I think 35 to 50% is probably 40% is probably par for the course.
That's interesting, Atul. Can you elaborate on LGT Wealth's USP and the key differentiator? Because you're competing with domestic heavyweights from Kotak Mahindra, HDFC, ICI, foreign players, HSBC, Stanchart. We know that UBS has exited and is tied up now with 361 in India, which is quite a formidable player. It's a very crowded field.
Yeah.
How do you stand out?
So Sri, it's quite interesting. The way we thought about our business was building a right combination of global and local, right? Because we felt that the local competition is very fierce. Mm-hmm. They are very nimble, they are very agile, but they lack this global perspective, global research, global advice, and very long-term view. Whereas a lot of the global players have, in some sense, failed to Indianize their business, right? Because Indian clients is in a very different life cycle of wealth creation, right? They need very different things than the clients in Zurich.
That's right. And India isn't a monolithic, homogenous market.
Absolutely. And it's definitely not similar. You can't really transport your advice models from what you have in Switzerland or Singapore or New York. It needs to be what I call Indianized, right? So, but global has a lot of value because, the global Indian markets, stock markets are also largely driven by foreign investors, right? So, so what we did, and LGT's sort of ownership structure, as well as the management structure, leads us to really connect the dots across the globe quite well. So our strategy was very simple, that build a highly capable local platform, but then ensure that you connect it to the world very well. And the combination is actually, we feel, is a white space. Actually, there are not that many players that are operating in that sandbox.
And it's two ways, isn't it? You have the non-resident Indians wanting to invest in India. You've got resident Indians looking to invest and park their money overseas. And this GCC India economic corridor is really taking off. And Emirates MBD entering India is testament to that. But India has and still has strict controls on capital moving abroad, and this $250,000 cap on moving money out of India remains. I know that the regulations are trying to address this through overseas portfolio investment and Gujarat International Finance Tech City. How far is that going, and is there an element of caution there with the centre because of the risk that these initiatives could create money laundering and other negative effects?
So if you take it in two pieces, one is the capital coming into the country, right, where NRIs and foreign investors investing in India. And then the second part is Indians investing abroad, where the capital is actually going out of India to get invested in global markets. There is significant opportunity and significant action on both fronts. We believe that foreign investors as well as NRIs, private client, not institutions, are highly underallocated to India. Indian markets have done exceedingly well in the last 20 years, even counting for rupee depreciation. So in dollar terms, they have delivered 12% compounding over the last 20 years, which is higher than S&P and NASDAQ and many other indices. Now, private clients around the world, we feel, have not participated in that, right? So I think, and a lot of it is to sort of go back to access being very difficult and taxation issues, ambiguity, etc. Now, a lot of that has been solved, right? So I think the Indian market access, definitely on the listed equities side, but also on unlisted
and just
side.
To be clear, Atul, resident Indians can make overseas investments through instruments offered by LGT Wealth in Gift City.
Yes. So let me just sort of finish the thought on the capital coming in, right? So the NRIs and foreign investors now can access Indian market quite seamlessly through GIFT architecture, the Gujarat Finance Tech City that you referred to. Now that has created the right ecosystem for capital to come in quite smoothly. So that's a large opportunity, right? And again, at LGT, we have deep expertise in markets in India. We have coverage abroad in Singapore, Hong Kong, UK, US, Europe, a little bit in the US. And so connecting the India capability with those clients abroad is definitely one opportunity. On the other hand, the Indian clients are also looking, Indian families, Sri, are globalizing, right? That's a trend that you can't stop, right? I mean, as every wealthy family's kids go abroad to study and they're all studied abroad, many of them stay back, work in the US or UK, and so the families are globalizing.
Evident here in Singapore.
Absolutely. So the families are globalizing, and hence their wealth will also tend to globalize, right? So there are structures. I think the government and regulators have done a good job again positioning GIFT as a viable sort of access point for global markets as well. So the regime that you mentioned, it's called liberalized remittance scheme, where every individual can move $250,000 to invest outside India every year, right? So for a family of 4, you can pool that, and you know, that's $1 million that you can send abroad every year to invest. Now that's quite meaningful, right? Now obviously it adds up over multiple years. Now we found the challenge was in handholding, right? As this money goes out, you know, who's going to sort of help the clients. Now again, GIFT allows us to really provide advice on that pool, and hence the clients have confidence that it's not just about sending $250,000 once, but actually you can really build it over time and make it meaningful. The second regime, very interestingly, so this was for individuals, the $250,000, but the government also has, regulators also has a regime called OPI, Overseas Portfolio Investment, where Indian companies can invest 50% of their net worth in dollar-based products, as long as those products are based in GIFT. So again, that's another channel that has been provided through GIFT for largely Indian investors, as you know, a lot of Indian
So the
wealthy
regulations
families.
are moving forward at all, but
Absolutely.
back to India, it's not one homogenous market, is it? It's major cities from Mumbai to Chennai, it's the entrepreneurial to first-generational wealth, a potentially younger cohort of investor. Where and how is LGT Wealth positioning?
So, yes, you're right. The opportunities are everywhere, but they need to be thought of in segments, right? So the metropolitan, which have been the traditional wealth hubs, are still growing and have a lot of wealth creation. But in India, tier 2 cities have actually been driving a lot of the growth in the recent times because of, again, those two factors that I mentioned. One was a lot of businesses that were being run. They are suddenly seeing liquidity events, and the clients in the tier 2 towns. By the way, these tier 2 towns are fairly large cities as well, but they are tier 2 versus the metros. They're seeing a lot of liquidity events. And second is financialization. That's actually rapidly sort of going across tier 2 towns, and clients are becoming aware about financial products. They always had money. A lot of that money was locked in real estate and gold, like I mentioned. Yes. That phenomena was far more relevant in tier 2 towns than metros. Metros obviously evolved to financial markets some time ago, but tier 2 are evolving now. So at LGT, we feel that we want to be where the clients are and where the advice is needed. So we have a fairly wide footprint. Yes. So we are not just in metros, but we are on the ground in many of the tier 2 towns as well, which is very unlike a global bank. Yes. But that's what I mean by Indianizing the business, that you really want to really serve India.
And your point about the financialization and the need to bring more investment products and options to the marketplace and to those clients is very well taken. And perhaps, Atul, you can come back and talk to us in further length about that at another opportunity. Thank you very much indeed for joining me, Atul.
Thank you, Sri.
Atul Singh, there, CEO of LGT Wealth India. We're back in 2 minutes. To Semicon Southeast Asia, currently underway at the Marina Bay Sands Hotel in Singapore. Sherry Kang is on the ground leading our coverage and sitting down with a very special guest. Sherry.
Yes, special indeed. And we've got the Netherlands Minister of Economic Affairs, Dirk Beljaard, joining us live on the sidelines of Semicon Southeast Asia 2025. Minister, it's great to have you on. Can I just start the conversation with your initiative for the CHIPS Coalition, 9 countries in the region signing up for this idea of working together to innovate and really prosper together. I wonder if this is going to be really the reality, more fragmentation and regionalism, perhaps, given the geopolitical complexities facing the industry at the moment.
Well, the complexity shows us that we need to work on the strategic autonomy within Europe, and that's why I've headed this Semicon coalition with the like-minded countries, and it's to show to the Commission as well that we are united as countries. And you mentioned the 9 countries. We started with 9. We're heading up to the 15 countries as well, and we're working together with the Commission diligently to roll out this plan to strengthen the semicon industry within the EU boundaries, and also by working on having more of the value chain on EU soil. So it's a strong commitment that we show towards the EU, within the EU, and for the countries alike.
I do have to say that Europe does have a lot of niche and very strategic strength when it comes to the semiconductor industry. Do you think it would actually help Europe's negotiation with the Trump administration in the United States because it's got this strategic strength?
Well, the Semicon and in the Netherlands with our GEM ASML, obviously,
yes.
It's a technology that benefits the world. So we're talking about well-being, welfare. This goes beyond technology. So it's something very crucial, and we're very proud of that. And we are working with all administrations to make sure that we all benefit from all the beautiful things that Semicon and the chips bring our society and our industries.
How do you assess emerging players like China, because the narrative around China is self-sufficiency? Sure, you got ASML, which is practically a global monopoly. Do you think China is making some meaningful progress when it comes to playing catch-up, when it comes to even EUV lithography area?
Yeah, well, what I touched upon earlier is that within the European Union we need to step up our game regarding our strategic autonomy. That's very important, because we've seen supply chains being disrupted after COVID time. So we know that we needed to step up our game. That's what we're working on with the Commission alike, and many other countries do the same, as we've seen here in Singapore as well. So it's only I think it's only wise that countries think on how to make sure that supply chains are steady and make sure that all the production lines keep running, and that everyone stays advanced in the technological field.
You're here in Singapore, and actually later on today you'll be going to Japan as well. How are you leveraging your relationship with these Asian countries towards your strength? Because some were actually pointing out that it's a lot harder and more expensive to make chips in Europe versus Asia. Is this region somewhat of a hub for your country's semiconductor players?
Well, in a way it is, because Singapore, and we're also celebrating 60 years of bilateral relationships between the Netherlands and Singapore. And Singapore is our gateway towards the Asia-Pacific region. It's an important player, as is the Netherlands the gateway to Europe for many companies from Singapore. So we're focusing on the trade relations. As you know, we as a seafaring nation, trade is in our DNA in the Netherlands. So we're open for new possibilities with other countries, and the diversity of the Asian countries is so it's fantastic to see how every country has a different role to play, and also in the semicon field. So it's not a and/or, it's an and situation.
Minister, it's great to have you on. Thank you so much for your time and your great comments, of course. That was Minister of Economic Affairs of the Netherlands, Minister Dirk Beljaard. Sri, it's back over to you.
Sherry, thank you very much indeed for bringing us that interview. Let's move over to Hong Kong now. Chinese battery maker Contemporary Amperex debuting in the markets there. CNBC's Emily Tan has been following the story and joins us now from the Hong Kong Exchange. Good morning, Emily.
Hi there, Sri, and a very strong debut for Contemporary Amperex in what is the world's largest IPO so far this year, after the company raised $4.6 billion after pricing shares at the top of the range at $263 per share. We can see a big spike up in the share price, currently traded near the intraday high of $302 per piece. At the market open, it spiked 12% and has only gone north since then. CATL is amongst the most heavily traded active stocks in the market today, only number 2 to Xiaomi, which tops the most actively traded today. This is the world's biggest EV battery maker, and they're using the funds raised to go towards a battery factory over in Hungary. We got a chance to hear from the company's chairman and founder, Robin Zeng. He says that today's listing is an integration into the global capital markets, and that CATL is not only a battery maker, but a zero carbon solution company. The transport market, he expects, will explode with growth, and that their ecosystem consists of battery making, battery charging, as well as battery recycling. It was the who's who of government officials. We also had, of course, the Hong Kong Stock Exchange chairman as well as CEO that came to the listing ceremony today. Paul Chan, Hong Kong's financial secretary, was also here. We got a chance to hear from Bonnie Chan, the CEO at Hong Kong X, saying this is the world's biggest listing in the world and it is trading well. It proves that Hong Kong is a great platform for IPOs and new capital raisings. She has indicated that there are 150 companies in the IPO pipeline and 40 of them being A-share companies. So it's very interesting and rare to see that a Hong Kong listed stock is traded to a premium against its A-share counterparts. So very rare for CATL. In what is a very strong showing today, it comes during a trade truce between China and the United States, but the geopolitical uncertainties could weigh on the company, but given that it has limited exposure to the United States, many analysts are still very bullish on the stock. Reporting to you live from the Hong Kong Stock Exchange, Sri, it's back to you.
Emily, thank you very much indeed for that. Coming up on the programme, we will take it back to the Indian markets. Is CapEx returning to the public sector companies? We'll discuss that with Rajat Rajgaria of Motilal Oswal, who joins us after this short break. Welcome back. You're watching Inside India. Some of the stories we're keeping tabs on outside of India. US President Donald Trump says Russia and Ukraine will begin talks towards a ceasefire immediately following a 2-hour call with Russian President Vladimir Putin. Trump also spoke with Ukrainian President Volodymyr Zelensky and other European leaders, calling it a defining moment for peace. Putin said efforts were generally on the right track, but no timeline was given. Iran says nuclear talks with the US will lead nowhere if Washington insists on zero uranium enrichment. Tehran's deputy foreign minister making those comments after the US repeated its demand for a ban on enrichments which could be used to build nuclear bombs. Iran insists its program is for peaceful purposes only. UK and the EU have struck their most significant post-Brexit deal yet, resetting trade and defence ties in a new era of cooperation. The agreement includes a security pact, smoother food exports and a new fishing arrangement, a move prompted amid growing global uncertainty and calls for unity. Let's bring it back to the markets, and we are counting down to the open in India. Let's give you a glimpse of Gift Nifty futures for an idea of the market and how it's going to open. And you can see here 25,071 is very likely. So it looks like we're going to retest those levels above 25,000 at the open, considering where we left off at 24,945. So just a very modest incline at the get-go for the benchmark Indian equities markets. Let's give you the dollar-rupee exchange rate while we are at it, 85.5025. Let's get more on the market outlook. I'm delighted to say that Raj Garia, MD and CEO, Institutional Equities at Motilal Oswal, is joining me here around the desk at the SGX on Inside India. He is in town for the Motilal Oswal India Corporate Day 2025. Rajat, welcome, sir.
Thank you.
Let's start with the outlook. And are there enough in the way of positive catalysts to push the Nifty 50 back towards 26,000?
Yeah. Good morning. Thank you for having me here. I think we have seen now almost the last 2 to 3 quarters of reasonable consolidation in the markets, right? But over the last 1 month, the rally has again got fueled by several factors. I think we have just got into the right momentum to take this market across the earlier highs and go even higher. The 3 things which I think are driving this, I think first, liquidity is back. And this time liquidity is back both from foreigners and domestic. Last 5 years, you have always seen they being on the opposite sides. I think this is the time when you are seeing both being the net buyers in the market for many days over the last few days. That is one. I think second, the Reserve Bank has been very positive on the way they have introduced measures on liquidity and rate cuts in the system. Today, from a big deficit, we are getting neutral. There have been a couple of rate cuts, so that always fuels the market. And I think third most important point is whatever is happening macro globally, it augurs well for India from an opportunity point of view. How we leverage that to build scale, time will say. But right now, people are again back on the talking chat that, hey, India is like a good structural story, so let us deploy more money here. So I think we are building a right momentum. Right. We just need to get our earnings growth back on track, and we need to keep doing the right things to attract more global capital. The domestic pool of money is very large, coming every month through the SIP. That is not stopping for a good foreseeable future. All in all, I think we are set to make new highs.
How would you assess, Rajat, the balance of risks on both sides of the ledger? Because it's not all hunky-dory out there. That yes, there is momentum towards a US trade deal. However, there is still the prospect of a slide back into conflict with Pakistan and renewed global growth concerns. Yeah. What could go wrong with the positive setup that you believe in?
Yeah, so that's the beauty of the market. It doesn't go one way up. It keeps balancing out moves on both the side. And I think any risk that will come will be from an event that today you and me don't know. Right? But more importantly, one of the things which markets have to be wary of, the way the momentum has been building up, you are going to see large supply of paper coming. both in the primary market and in the secondary market. We would have a record DRHP filings for IPOs at this point of time, right? I think we have to be just cognizant that the valuations in the primary market are taken care of so that they attract more investors. That is one. I think the second is you are going to see a lot of secondary sales which will happen, either by the global private equity guys or by promoters. That has been the trend last year also. That trend will happen this year also. But I think the most important risk that I see is if we do not seize this opportunity that the global investors and the global corporates are offering to us today, then it will again become where the markets run ahead of the fundamental. We have to build capacities on manufacturing. We have to improve our growth prowess, and we have to fuel the domestic consumption. I think these three levers are yet to fire in the manner in which the markets are right now firing.
On that last note, on that last issue, Rajat, can we expect more government CapEx spending to drive the markets higher, or should we look for private CapEx in the form of FDI if these trade deals see the light of day to really drive sentiment?
Look, government CapEx can always be enabler, but the big driver has to be private CapEx.
Yes.
And if you look at last 4 years, every year we have been thinking that after the government CapEx initiative, some private CapEx will begin. But it hasn't happened in that same intensity. And the two reasons are, I think businesses have not got a predictability of a 3 to 5 year run in their sectors. Things have been so volatile globally and locally that people have been little more worried of their cash management, right? And I think second, the large corporate groups have bought more of the existing capacities from the market. Now, businesses have to be confident that the cost of capital, raising equity, and the opportunity on the business side is more consistent. So that will fuel private capex. But till the time you don't see private capex, government capex is not sufficient to drive. And government capex will be few sectors, maybe defense, maybe railways, right? But private sector is about the industrial capex, which I think is yet to happen in a meaningful manner.
It's been said that PM Modi is closing in on a trade deal, triple crown. UK, India, that's in the bag. EU, India, US, India could be next in line. What are they collectively worth, Rajat, for the market? And how is the market trying to price this?
So I think this could be a game-changing event for Indian economy and corporate sector for this decade, or maybe more than a decade. Why so? I think the India-UK treaty was a first sign to come on where can we be. Look, India is a very large market, not just to produce for global economy, but also to consume what global economy produces. So it's a two-way economy that rest of the world would want to engage with. India, UK done. I think India, EU, you will see on very similar lines of India, UK also happening, right? India, US, I think is something that needs to be watched for, not just from a business point of view, but also from a relations point of view, right? Because US is right now negotiating with many other countries in the world, right? I have no doubt that we will be on the right side of the trade of all these three big economic partners, right? That opens up a massive opportunity, not just to produce, but also for us to be competitive versus every other nation in this region, where a 140 crore population country can consume what the others produce, and we can produce what the other trade partners from us will consume, right? So I think this is a very important event. Once the government signs, it is up to the individual corporates to make sure that how do they benefit from it.
At a sector level, Rahul Jain from Goldman Sachs last month upgraded the Indian banks. And of course, it's a bet on the economy remaining resilient despite the headwinds we're seeing on the tariff side. Credit growth, that may be a cause for concern domestically. How convicted are you towards this space, towards banking and financials?
Yeah, so now almost for the last 3 quarters, we have been writing that 2025 will well be the turning point of banks in India. Essentially led by 3 things, 2 macro, 1 bank specific. First macro is the rate cycle had peaked out. Second, I think you are seeing some signs of credit growth picking up, even though it remains, teens, but I think that's still good. But I think the third most important point is that the credit quality for banks is still very pristine, right? Banks
Despite these concerns about a household debt crisis brewing amongst India's middle class?
I don't think there is any such crisis.
No.
The EMI as a proportion of incomes in India still remain very low. I think there are some pockets of credit, maybe like segments like MFI, where there are some areas of worry, but they are very small portion of over. Today, the loan book of every bank is as diversified as I have seen in the last 3 decades. The credit quality is as good as I have seen in the last 3 decades. The business outlook, I won't say is as positive, but I think is getting better, right? And these stocks have consolidated very well for the last couple of years, right? Banking is an allocation sector for large investors. Today, if you look at any index in India, financials will be 35 to 40%, right? So I think this is a space where large investors love to allot, and no better time than this for them to put more money.
And we can see Nifty Bank Index performing strongly on a year-to-date basis. So,
yes.
Rajat, if I can put you on the spot, which name or names within the space really gets best of breed, in your opinion?
So I think if you look at our top picks in the banking, which we have been articulating very often now, ICICI is a consensus buy for everyone, and for all the right reasons. I think they are tick marking almost everything that a great stock should be doing. That remains by far the highest conviction bet for us. We recently upgraded Kotak Bank after a long time. We thought some of the moves that they are doing are quite right. There may be, a quarter off here and there, but I think after the new management coming in, they have taken some time, but things are looking back. And the third is a new private sector bank, AU Bank. Again, a high growth, typically grows in the rate of 25 to 30%. Very top quality management. It's a, ICICI Bank tick marks everything. Kotak is something which is coming out of a shell, and AU is something which is a high growth franchisee in the making.
How are you approaching pharma now that we know that President Trump plans to cut US drug prices?
Yeah. So, I always believe in India there is nothing called pharma, right? Because it is so complex sector and so many different models that you cannot bundle them into one space. And a lot of the noises are actually coming from the global pharma, while most of the wealth creation is happening on the domestic healthcare. If you look at the franchise, domestic formulation, you look at the export models, you look at the hospitals, you look at the retail chains, that is where last 5 years the entire wealth has been built. I see no change happening for the next. The opportunity in healthcare lies more within India, right? And that is where business models are getting centered to. On the export front, I think rather than the tablets, you are going to see more opportunities on the infrastructure and the equipment, from where companies from India can target a very large market in the years to come.
Interesting. And are you participating in this small cap rally that we've been seeing since mid-May, really on the back of this easing of US-China tensions and the Indo-Pak ceasefire?
Look, I think one thing we all are aligned that we will see some geopolitical issue somewhere in the world going now throughout, right? Sometimes it will be away from us and sometimes it may be closer to us, right? When you do investing, you always have to keep this unknown known risk in your mind, right? But I think more importantly, if you are in the right growth phase with the right company, of course the volatility in the stock will be there, but that will be the first one to bounce back whenever things were to settle. So it is very difficult to factor in what and when you don't know. So I think live with that risk, focus more on the return.
And this touches on small caps, this touches on your point of geopolitics, defence stocks. They have been extending the rally, but are they looking or starting to look overextended? Though the centre has said that Operation Sindoor is not over.
Well, I think this Operation Sindoor makes one thing very clear, that the investment in our defence infrastructure is not going to get over any time over the next few years, right? We have to keep investing, keep building more capabilities, and that holds true for every country in the world now, right? Defense is something which has only come of age in the last 2-3 years from the private sector point of view. I think the re-rating into the stocks have been massive. Now you need to see the order book getting translated into the revenue numbers and the profits. So stocks have run up a lot. I think profits need to come, but this is a sector which is going to keep investors interested for quite some time.
Rajat, what are the highlights and the standouts and the surprises, perhaps, this earnings season so far? Because there has been something of a mixed report card for FMCG and the IT services.
Absolutely. So I think first the highlight has been banks have brought the confidence back.
Yes.
If you look at the banks' results, I think they have brought that money allocation back into the space. Similarly, if you look at IT, companies have been very cautious, and you may have seen some exception, but overall, people are wary of being on the IT space. Consumer is divided between FMCG and consumption.
Yes.
The traditional FMCGs have their own share of challenges. I think their best case growth rate is 8-10%. The discretionary is where you are inventing your model to build a high growth case. Industrials, again, a mixed bag. I think
just very quickly on the FMCG space, Rajat, quick commerce, is that an investable theme for secular patient capital and long-term investors, or is it looking like a passing fad to you?
It is one of the most investable, interesting theme of India. It's a winner takes it all. There are only 2 to 3 companies. If you look at the listed space, there are only 2. They have built a scale. They are building new revenue streams. The kind of economy that India is and the opportunities it offers, 1 or 2 of them are going to be like mega size, right? At this point, you have limited options, so you have to bet on the obvious leader.
Are you at liberty to say who those 2 names are?
Look, in the listed space today, you have Eternal, which was earlier Zomato.
Yes.
And then Swiggy, right? Zomato is doing a lot better. They have their own set of, look, this is not a business where every quarter you are going to get like rock star numbers, because they are also into an investment re-strategizing phase. But if you look at 3, 5, 10-year opportunity, there's a huge business which is waiting for them to come.
Raja, it's been a great conversation, sir. We'll leave it there for now. Thank you very much indeed for joining me. Rajat Rajgaria there of Motilal Oswal. Thank you, sir. Right, Indian markets have just joined the trading day, and we will take a closer look at some of the movers in Mumbai after this short break. We are back in 2 minutes. Welcome back. Let's take a look at the Indian markets, which are just online, and Nifty 50, the benchmark, really trying to nudge a test on 25,000, not quite getting there yet. So very fractional gains at this very early stage in the Indian market. Let's take a look at the exchange rate, dollar rupee at 85.45 on the nose. Let's take a closer look as well at some of the movers in the Indian markets today. Vodafone Idea's petition to waive over $5 billion in debt has been rejected by India's top court. The country's third largest telecom carriers are estimated to have a net debt of $25 billion as of September. The company has struggled to repay its outstanding spectrum and revenue sharing dues since the 2019 Supreme Court order widened the scope of revenue assessment. CEO Akshaya Mudra wrote in a letter to the government that no support will lead to a point of no return and that the company will not be able to operate beyond FY26. Stocks sank as much as 10% on Monday's session. Currently, it is stabilising around this level of 675. Earnings season underway in India. DLF shares are looking like this, having a reasonable day, up by 1.6%. Property developer reported a surge in Q4 profit at 12.82 billion rupees, beating estimates. Company also announced a dividend of 6 rupees a share. And Reddington also reporting earnings overnight, posting a higher quarterly profit, driven by strong demand for cloud services and automation. The Apple and Samsung distributor saw a surge in Q4 operating revenue to 264.4 billion rupees and a 41% year-over-year increase in its cloud business. Reddington also saw strong growth in Saudi Arabia and Africa, reflecting its strategic investments in these markets. Shares up by almost 7%. Now, two tech titans, NVIDIA CEO Jensen Huang and Foxconn chairman Young Liu, took to the stage together at Computex 2025 today, which is where we find JP Yong at the event in Taipei. JP, tell us more about what came out of that conversation.
Absolutely, Sri. And to be fair, this is Young Liu, the chairman of Foxconn's keynote address, but he did invite NVIDIA's Jensen Huang on the stage because we know they, alongside TSMC, are actually building an AI supercomputer in Hsinchu in the northwestern part of Taiwan. And they've actually hinted at the collaboration when this is going to be actually built. Now, it's also on the theme that was set by Jensen Huang at his keynote address yesterday, where he talked about data centers not being data centers, but actually AI factories. This is something that Young Liu of Foxconn also supported. In fact, he actually indicated that the way Foxconn operates its factories right now is very much AI-driven. In fact, he said that artificial intelligence now drives about 80% actually of a lot of their defect detection and quality control tasks actually, and has freed up a lot of what they've done. He's also said that they also pioneer what he's calling digital twin factories, where they're actually using Gen AI to create simulated factories virtually to achieve operational efficiencies in these simulations before they actually build out the actual factories, which means that factory or the factories that Foxconn is building in Tamil Nadu, actually in India, might have gone through some of these digital twin factories and simulations before they actually broke ground and started building out these facilities. So very interesting to see how technology has transformed even the way Foxconn itself operates its actual factories and its participation in the thrust towards artificial intelligence, Sri.
JP, we also got some news from Hon Hai or Foxconn about doubling down on their plans in India. What is the sense that you're gathering there about India's AI ambitions at Computex?
Well, I think it's very interesting, too, because it's also in lockstep with Apple, which is one of the biggest customers and still the biggest revenue source for Hon Hai in terms of sourcing, in terms of building out. And since they're shifting some of their manufacturing to India, it makes sense for Foxconn to also double down in that place. But interesting you talk about AI in industry, because when you think about it, a lot of the one of the things that's really a bit of a head scratch right now is why India doesn't have an AI company or AI innovation the same way DeepSeek does. Because when you talk about India, all the ingredients are there: a healthy and plentiful pipeline of computer engineers and computing talent there, land and resources, and capital as well to build out data centers and the like. So it's a bit of a head scratcher to see why India isn't there yet. I did speak to someone on the sidelines of Computex about this, actually. He said that there are efforts right now in India to build out and to move and to catch up with the likes of China in terms of AI. But right now there is legislation and regulation that needs to be established in India to make sure that intellectual property is protected, not just for the foreign companies investing there, but for budding individual and homegrown innovators in India, to make sure that any innovations they create can actually be protected. And again, creating that regulatory framework will be very key, because when you think about it, all the ingredients to participate and move up in terms of AI are also there in India, and it would be a missed opportunity. And what they need right now is more regulation to actually make sure, and a clearer regulatory framework to ensure that these innovations can be fostered out of the subcontinent, Sri.
It's a fascinating narrative, JP, and India's IT minister still believes that India can manufacture its first homegrown, domestically produced semiconductor chip by 2025, by the end of 2025. So let's watch that time frame. JP, thank you for that. That's all the time that we have today on Inside India. Do keep watching CNBC, Access Middle East, and Dan Murphy is up next.